Good morning, everyone. It's Dan Basse and Ben Buckner coming to you on Tuesday, the 24th of June. It's a bright sunny day here in Chicago, though we are expecting for some showers later today. And as we look at Chicago ag markets, we finished out in the abbreviated session down about 2 on corn, 10 on wheat, and also somewhere in the vicinity of a 3 to 5 down on soybeans. The big loser this morning is soy oil, seeing some pressure from the monumental or near record drop in crude oil prices in a 24-hour period. We saw crude oil prices peel back about $11 a barrel, if you will, and that's a sizable move when you look on a percentage basis. And again, we're now trading crude somewhat lower here this morning, though we have bounced off the lows. Of course, the truce or the peace that was indicated by the President Trump, there was some intrusions on that by both Israel and Iran, and it got the oil market wondering if we really are in a ceasefire or not. Other news overnight has, of course, Mexico buying 630,000 tons of U.S. corn. We believe that's tied to their soft drink industry, which normally buys this amount of corn for corn fructose every year. So I don't think that's a big surprise and not a change in their pricing. And there's also a lot of talk about Brazilian corn prices being very soft, and Russian wheat prices also coming down. I'm hearing this morning we're trading Russian wheat 221 to 222 a ton. The seasonal low last year when we got into the Russian wheat harvest was $216 a ton. So I imagine we're heading to that level as world corn and wheat trade still remains relatively benign, if you will. And the market's looking for demand, in particular on wheat, as we get closer to the Russian, European, and we advance the U.S. wheat harvest. So Ben, give us a rundown here and what you're thinking today, and we'll kind of go forward from there.
Yeah, it sounds good, Dan. Crude oil is going to be your best proxy for how the market's assessing conflict risk in the world, and it is lower today. And like you said, it's dropped quite a bit. So I think people are kind of unfazed about the movement of raw materials, and we've learned since the Russia-Ukraine war beginning that if you can get physical supplies, conflict doesn't have a big impact on the pricing of those goods. I think that's the biggest indicator. Focusing on the weather, getting into the details of crop progress report and peeking into the early corn pollination. Just the consistency of the principal weather models projecting the shift in the eastern Midwest. So we do have another couple of days of pretty hot temperatures, 80s, low 90s. But every single day, this has been the case that starting Thursday, Friday, you do have this cooler temp profile spreading from the plains where it exists currently into the heart of the U.S. Corn Belt. So that the first 3 or 4 days of July look pretty routine or unremarkable summer-wise in terms of the pattern. So I don't think there's a new threat looming in U.S. weather. And if you don't have conflict risk, I think the market is turning its head and focusing back on the swelling of physical grain and oilseed supplies that's coming. And again, we're kind of getting closer and closer to reproductive stages for corn. And here's what the 7-day preset forecast looks like on the left. I think this is important this morning because NOAA has adopted most of the weather models ideas that it will rain again in Michigan and the far eastern Midwest. And that's been the place that we've seen the most rapid soil moisture loss the last couple of days, but it is coming back. So it does look wetter east of the Mississippi. I think that's kind of a big deal to soil moisture levels. And on the right, you see where NOAA is telling us soil moisture anomalies will be on June 30th. So some pockets of Iowa, eastern Nebraska, northern Illinois, negative anomalies, not terribly intense. But otherwise, for the most part, the central U.S. adequate to abundant soil moisture on June 30th, and most likely July 6th and 7th as well, assuming the 2-week forecast verified. So again, as we're kind of getting into the middle part of summer, the heart of the corn growing season, just looks unremarkable, very routine summer weather pattern. And so I think that's part and parcel of the premium that's been extracted from the corn market specifically. And I think one of the not surprises per se, but also we are seeing Midwest corn starting to pollinate as of last weekend. So Illinois' crop is 1% silking, Iowa's 2%. And of course, North Carolina, as seasonally normal, getting close to 50% pollinating, and Tennessee is 29%. So if we take a deeper dive into what crops look like as we're getting into reproductive stages, they do look pretty good. So near record ratings as of the latter half of June in Iowa and North Carolina. Iowa's corn crop, 83% good to excellent. Illinois, 74%. And North Carolina is, over 80% good to excellent. And that compares to 30% a year ago. So where weather matters the most and where I think our focus is on corn crop health, it looks very, very good. So, I don't think we're going to get into 50% pollinated and see much of a weather threat or stress to those crops. So we kind of highlighted this, just having this hyper focused on the south and southeastern corn crop, and it looks pretty big. And again, 120 million bushels or so above last year, most likely if we avoid threats for another couple of weeks. Wheat too. I think the wheat harvest in the U.S. is delayed, and we kind of saw this coming. This is not terribly surprising. We're 19% harvested in winter wheat as of Sunday. That compares to about 45% on average. But I do think we're going to get to about a third harvested this weekend. So that's about 420 million bushels of wheat available to the cash market. And I think to your point, Dan, about falling Russian wheat prices, sinking Brazilian corn prices, the next step is looking for an outlet for this stuff. And I do think the wheat market is going to struggle to find, a pretty quick way to get rid of excessive supplies. Again, Russian wheat's very cheap and aggressive. I think too, Argentine wheat is also still for sale and it's still very cheap. And that is kind of unusual. Usually the Southern Hemisphere markets clear their stocks very, very quickly, as quick as possible. And they're kind of out of supplies by the Northern Hemisphere summer. But that's not the case. And Argentina still has record carryover wheat supplies of about 5 million tons. So I think the entirety of the wheat market, exporters in Russia, the US, and Europe do have to contend with this competition from Argentina that we did not see a year ago. So again, finding those outlets is going to be difficult. Cash hard red basis in Western Kansas, 65 under against 55 under a year ago. So I think that market is looking for elevated summer feed use. But today, the cash hard red market still about $10 a ton above corn in Western Kansas. So you have this battle, I think, for which commodity gets fed. And of course, competition is never terribly bullish of price. I do want to communicate that this is happening. I mean, it's something we have to watch. I don't think it's a very significant issue to price discovery during the summer for corn. And I don't think there's going to be a problem in winter crops like barley, rapeseed, or wheat. But it is very dry and it is very hot in Europe. So, temperatures in France in the 80s, that is, 12 degrees above normal. Hasn't rained a lot. Doesn't look like it's going to rain a lot in some concentrated corn producing areas in Eastern Europe like Romania and Bulgaria. So just want to, again, communicate that this is happening in the background. I don't think it's going to stop the decline in Chicago prices, unless there's a U.S. weather threat. But just want to be cognizant that there is at least one hot spot in the world today, and that is the European continent. But otherwise, I think, again, it's trying to find export demand. We've got big crops coming, and the competition is there. Russia, Brazil, Argentina, Australian wheat, et cetera. And that's something that we have to be conscious of. Again, the demand side, that the market probably isn't going to focus intensely on until we get into harvest, but that does kind of linger in the background. So I think that's where we are. The decline this week does make perfect economic sense, I think.
No, good rundown, Ben. I agree with you. I was surprised this morning. Ukrainians are out saying their corn crop is generally good to satisfactory. So that's a little better than I was thinking for. But, again, the Europeans produce about, 60 million tons of corn. Let's call it 2.4, 2.3 billion bushels. So they lose 10%. That's 40 million bushels. It's important, but not market changing. I think that's the key that I would leave with everyone. So, we're hitting downtrends. It's a seasonal bearish time of the year. We've got a stocks and seedings report out on Monday. We've got first notice day out on Friday. Those are the key events as we go forward, and then we'll come back from those events and wonder if we've got any problems. So to keep up with the markets and keep up with Ag Resources recommendations, we have of course, dollar. You can scan the QR code here and get 1 month of our service for $1. See if you like it, and then go forward from there. But again, we're trying to have farmers relatively heavily sold, and we've been at this mark for the last 3 to 4 months, just heading into this pollination period. Any final comments, Ben?
I think so. This week, we had more stocks estimates, so kind of prepare everyone for that report on the 30th, which can be pretty volatile, but we want to give you the framework for what most likely happens once that report's out. So again, dollar gets you in for 30 days. Check all that research out.
Yep. All right, everyone. Have a very good trading day. We'll see how our friends in the managed money world do, but they've been selling. And at this time of the year, like last year, they normally keep selling, but we may get some kind of turnaround at some point. It is Tuesday. Be well,